Very good afternoon to all. Welcome to Tally CA Connect. So it's great to meet you all every Wednesday discussing TallyPrime features, get your queries answered. So as the tax audit ends and the GST audit approaches, so our today's discussion is based on annual GST computation using the help of TallyPrime. And our expert for today is Mr. Ezhilarasan T. Elitzer is an indirect tax expert and a tally evangelist. He's a speaker at various forums addressing GST, implementing GST, and TallyPrime training. So thank you so much, Elitzer, for this topic at this important time. And of course, this will be very helpful. We did address this topic a few weeks back in Hindi, and we got a request that we should address in English as well. So thank you so much for taking out the time. And thank you, audience, for joining in with the tax audit period still going on. So without further ado, let's start it. Thank you so much.
Thank you. Thanks for your introduction, Komal. Thanks once again to the entire team of Tally Evangelists. Keep on doing this consistent programs over the every every Wednesdays. Again, my many more thanks to the audience who are keep on motivating us and giving valuable feedbacks and coming along with us over these periods. Anyway, as you rightly said, this is the topic highly important at this season. Usually we discuss this annual return at the fag end of every financial year. So my just a minute, and just okay. So annual GST computation made simple. How it is made simple with our TallyPrime. This is what our objective. Our next 90 minutes discussion. Yes, the topics which we are going to cover in this 1.5 hours are the reconciliation of our annual turnover with the books of accounts and the returns which we have already filed in the monthly GSTR 1 and 3B. Then how effectively we can manage this ITC reversal, because this point is now in this financial year 24-25, this is much more important, because the table 7, all you might have already gone through the requirement of the annual return for 24-25, where the reporting of table 7 ITC reversal is reporting of ITC reversal at table 7 of GSTR 9 needs some more attention right now in 2024-25, because we need to give the bifurcation of reversal under various rules and sections, ineligible ITC section. Therefore, this needs some attention now. Then the breakup of ITC at table 6 in our GSTR 9 annual return, we have to give it an input services, capital goods breakup, all these things are there. How it is effectively managed in TallyPrime also we are going to see. Then the reporting mechanism of this import of goods and import of services. There are two elements here. Import of goods, it comes through a customs gateway. The customs gateway, we pay the IGST and we take an input credit. So how we account it in Tally and how it is getting populated in the monthly returns as well as the annual returns, that we are going to see. Then import of services, though any tax is not rightly paid on this upfront, it is not paid in import of services, but there is a legal requirement of GST to be paid in a reverse charge mechanism on import of services. All you would have already known. So how it is being taken care in TallyPrime, how it is effectively being pulled back in the monthly returns of GSTR 9 in the table 4 ITC classification, particularly in the import of services segment, as well as in the annual return of table 6 bifurcation. There is a separate column of import of service, ITCs claimed over the import of services, separate column is there. So all these things are picked out from the basic entries which we are going to make in the Tally. All these things we'll discuss in the coming hours. Then computing and reviewing the annual HSN summary. Anyway, this headache right now in the current version of portals annual return GSTR 9, they are giving some downloadable Excel format based on our earlier monthly GSTR 1 filings. So once you get into that GSTR and annual return menu in the portal, there you have an additional tab button in the dashboard of the annual return, where it gives you the compilation of the HSN summary, which we have already uploaded in a GSTR1. So anyway, right now we have an additional tool to verify along with our Tally's annual computation table. We have an additional support to sheet from the GSTR portal, wherein it compiles all the HSN summary already been reported, and we can match it out. Then other way, even we have a facility in the GSTR 109 in the annual return in the portal, wherein we can download the offline utility. So offline file also, in that also the pre-filled information as well as the HSN summary is coming along with the offline utility of the current year. So let's quickly move on to the topics as well. Here, the annual turnover reconciliation, how it is happening, because this topic has some significance over reporting in GSTR 9 as well as the 9C. 9C is a reconciliation statement. It's a separate requirement applicable for person taxpayers having a turnover over and above 5 crores in a year, right? Earlier it was of the obligation of a chartered accountant. Now it has been given to the taxpayers itself. Anyway, the computation is governed by the computation is already done by the chartered accountants and qualified professionals only. Anyway, so reconciling the turnover needs first importance in our annual return preparation. So really on reconciling the annual turnover, on reconciling the annual turnover, the key elements are, so these are all some practical inputs which we get over the last few years of preparation of annual return. So there are challenges. There are challenges in identifying the correct turnover from the profit and loss account while comparing it with the outward supplies which have been declared in the GSTR 1 and 3B. Yes, I'll show it to you. First of all, before getting into anything, so I'm just directly going to the TallyPrime, where the first thing what we do is before computing the annual return, we used to check our profit and loss account turnover, right? So for the 24-25, my turnover stands here is 1 crore 5 lakh 99,919. I just want to match it with the GSTR 1 3B and the annual return which I am going to do. So 1 crore 5 lakhs. Let me see the GST report. If you have all the data in TallyPrime, I can straight away go and compute my returns from the tally, and I can check it out. Is that my 1 crore 5 lakh 99,919, the total taxable amount here you can see. So first check to ourselves is the taxable value which have been taking for computation and the outward supply reporting is the same, whether it is the same with the P&L account. Now I am going to the annual computation. So all you have already experienced with this, Tally has already come up with this annual computation. This is one of the assisting element for annual return preparation along with our GSTR 1 and 3B. In that annual computation, so while comparing this annual computation table with the prior versions and all, there are some more improvements over here also. So the arrangements of headings, all these things are different over to the earlier versions. So you kindly check over it. Now my first work is whether my total taxable outward supply is the same with my turnover as reported in the IT income tax P&L account. So the turnover here is 1 crore 5 lakh 99,919. So this is as the same in my profit and loss account. So my first element is over. Beyond that, my indirect income is there. So indirect income probably would have some interests from banks, or I got from refund from IT income tax department, and the interest from my refund is this. All these are not forming part of my outward supply. Anyway, it is separately available. So my the first step verification is whether my sales account showing sales account and direct and indirect income showing at the profit and loss account is the same as compared to our GSTR 13B outward supply, as well as the annual return outward supply, taxable outward supply. Right. Along with if any exempted turnover or my zero rated export turnover, anything will reflect in my turnover. This will be this should be the same when compared to the annual return computation. Then one more thing we have, I just want your experience on this thing also. In the GST report menu in our TallyPrime, we have in this reconciliation reports, we have GSTR1 reconciliation also, because I need to take a double confirmation on the turnover which you have already reported in income tax, which are which is we are going to report in the GST, right? So in the GSTR1 reconciliation, in the latest TallyPrime, we get an option of reconciling the GSTR1 data also. So I can pull the data from the exchange menu, GST option, download returns are there. So I can download returns from this menu. So download GST return and configure. I can select the GSTR1 and I can set a period. I can set a period, because this download and download data, Tally has given a flexible download of periods more than a month. So I don't think how many of you have already tried, because earlier we had a facility of downloading 2A for a month alone. Then for compiling number of months or for a year and all, we need some more mechanism. But here in the latest TallyPrime, Tally is giving in the Tally connected facility itself, it downloads directly from the portal. For this thing, I just again I'll just again make sure my user IDs and passwords have been rightly configured at the F11 feature. Then I need to, before download, I need to go and log in. I need to go and log in my GST login. So while trying to log in, connecting from TallyPrime, I need to get a OTP. So all these things happen. All these things we have already experienced. We have already have seen some 2B reconciliation. We have already seen some invoice management system, IMS matching mechanism. All these things, Tally connected features runs with downloading of those returns. Along with that download, right now I am downloading GSTR1 also. So my first verification starts with a sale turnover reflected in P&L turnover. The second step is I am just verifying it along with the uploaded one as well as the report available in the Tally. So uploaded one is there in the blue colored blue colored data here. So the blue colored data are downloaded from I recently today only I downloaded, today morning I downloaded. So the downloaded data we cannot alter manually, so it is from the portal only. So by this I am very much sure that my turnover and the taxes associated with it, the IGST, CGST, SGST, are similar. So my books data, turnover, tax are similar to the uploaded data. So with this, my first confirmation arrived. So my books are prepared in line with my already uploaded GSTR1. So to get this confirmation, I require all of you to, before computing the GSTR9, just go to the exchange menu, download the GSTR1 for the whole year and go to the GST reports menu, go to the reconciliation aspect and get the GSTR1 reconciliation. Make sure all your outward supply are matching with the outward supply and the tax associated with your outward supply are matching with the uploaded information. So books and the uploaded informations are the same. Anyway, now in this data, I have just shown you only the taxable supplies. Anyway, coming back to the challenges here. Here the challenge is the discount other charges and deducted from the tax invoices. What is our taxable value, transaction value loss is, transaction value loss is that whatever deductions you make in the invoices, that has to be deducted, netted off, and the tax has to be applied on the net value, no? So here we will have a mechanism. I'll just show you some example here. Let's say I'm just making one sale invoice with that discount. How it is effectively been handled. Let me see. Just a minute. So here I am just putting an entry for product A, interstate supplies. So here I am giving a discount. I am giving a discount of 20,000 rupees. So my tax has to be calculated on the net 9 lakh. My tax has to be, the tax rate is at 5%, right? So my tax has to be calculated on the net 9 lakh 80,000, right? When we apply a composite supply rules. Okay. So here is that. So for calculating this, we need a small configuration over here in Tally, this composite supply configuration. While creating a ledger itself, here we are putting this type of ledger not applicable and include an accessible value. Include an accessible value, GST, and appropriate goods and services, and based on value, method of calculation based on value is already picked up. So with this configuration, my tax is calculated on the net of the bill value. So I have classified discount on sale under sales accounts. If I say, if say for example, I classify it under indirect expenses because I am giving discount to my customer. In that case, my profit and loss account will show you 20 lakh of rupees, but my GSTR1 report, my GSTR1 report will show you 90 lakh 80,000. So this is the peculiar mistake. This is the peculiar difference we get. I can say it is a common difference. Most probably everyone will get it. Everyone will get it while comparing the profit and loss account and the profit and loss account sales account and the GSTR1 uploaded outward supply, because the outward supplies here are calculated based on the transaction value provisions of the GST law. The transaction value provisions says the net value at the tax invoices, the taxes are applied. So my postings are different. My books of account posting is different. My books of account posting is 20 lakh is posted in the sale account. My discount is here in the expenses side. So the challenge here, yeah, since it is a single entry, I can able to trace it out. But for number of entries over the period and there are number of discounts and all, this is hard to identify. So for this, I just want you to have a small look on the sales register columnar format. So while computing the annual computation, I don't want any other feature at all in the columnar, but I need all items automatic columns. So in that we will have this fiber. So once we see the P&L account, the sale ledger shows me 20 lakh. So where can I get 90 lakh 80,000? Yes, here. While seeing this columnar, I can see here is a column, here is a column which shows 20,000 deduction from the total turnover. So wherever you get these type of adjustments, not only for this discount, we may have packing charges, we may have freight charges added up to the transaction value. All these things scenarios will happen in the reconciling the turnover. For reconciling those things, my first point is because you get a difference between ledger sales ledger account with the outward supply. So identify that, go to the sales register, have the columnar, and check out the sales ledger account, additional ledgers account balances, net it off, find it out whether that net figure is tallying with your outward supply. Whether this information sounds good, can you please anyone give a feedback in the chat, please? So whether this information sounds good, because the turnover reconciliation starts with small things like this, small things like this, because we the professionals need some pakka, we need pakka statesman right now, because the tax administration, tax officials are more smarter than us right now. So more smarter than us now, smarter than us right now, because they are shooting up many notices on comparing this thing. So disclosing a right outward supply. Thanks for entire people feedback. So my reconciliation of turnover starts with this small thing. Let me go with other things also. Thanks for your compliment here. Thanks sir. So I am somehow giving some valuable information. I am very much thankful to all of you gathered here. So like this discounts, we need to check it out for other additional charges, if anything been added to the sales invoices, wherein the outward supply taxable value is of the difference while comparing the sales profit and loss account with the outward supplies. Right. Then, sir, I'll take some questions and all in the later point of time at the end of the session, sir. If anything to be answered, you can mark it out in the Q&A also, sir. Q&A, don't put it in chat. Q&A is, I think it is only chat. Okay, you can put it in the chat. I'll answer it.
The Q&A is
That
also there. They can add.
Q&A is also there. Okay. Anyway, you can put it in the Q&A. I will answer it. Yes. The next element while comparing. So these are all some most common repeated things we used to hear. We used to hear on reconciling the annual turnover. Those subsidies, any subsidies or some export incentives, all these things, these are all also excluded from the transaction value. So probably all these things will be in your P&L. But one thing anyway, by taking the sales register columnar, all these things also made reconcile. But one simple thing configuration, I just if you, for example, if you want to create a ledger export incentive, um, creating this sales ledger and all, while creating this sales register, kindly just check the configurations are being the ledger creation configurations are being rightly identified here, because here in the nature of transactions, right? So here we need to pick up the nature of transaction correctly. Then only your population of outward supply, the reports generated and outward supply would be correct. So many questions I get it while creating the ledgers. Many are saying, sir, this nature of transaction I'm not getting. Don't worry, sir. This TallyPrime has so much of inbuilt configurations hidden in the F12 configuration. They always, whenever you go to the F12 configuration, have a practice of putting yes to this show more configuration, also show all configuration. When we say this, then only we will get all these additional questions or additional configuration which are available in the screen. On-screen configurations are available here. Here that nature of transaction is there. Similarly, other things also there. Reverse charge applicability question is there. If I can directly put a particular ledger as an ineligible credit, that configuration is here. If I say no, 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 all these things, that questions won't appear in the screen. So probably many will say, sir, initially when they get into that screen, sir, I don't get all these questions. I am not getting in nature of transaction. I'm not getting anything and all. So all this are getting available in the additional configuration here. So before analyzing your sales ledger, before analyzing the sales ledger in Tally, make sure all these GST related configurations are set to yes. Then only I can evaluate whether these ledgers have been correctly posted, because uncertain transaction, the exceptions, everything lies on this type of configurations only. So the main strength of Tally is proper configurations of masters. Either it be a accounting master or it is a inventory master. Proper configuration is much more important. Anyway, then yes, I have already told you interest income. Interest income, in our earlier example, we get an interest income from IT refund, and now this interest income in term deposit. But this interest income, we will not, some would have configured in exempted supply, but if you are not configure anything, because all these subjects which are away from GST, say for example, interest ledger, interest on term deposit, interest on term deposit. Here, interest on term deposit, we will classify it in indirect income, but we will say simply say GST not applicable. GST not applicable because interest income on the deposits, investments, yeah, all these things are not taxable, no. So therefore, we can straight away we somehow we have said it as GST not applicable. Be careful. Otherwise, we can say it is an exempted supply also, because it is coming under the exempted supply list of 12 or 2017. So any discounts or any interest on the deposits loans is an exempted supply as far as the GST is concerned. So be sure the differences, the various elements of differences. Dividend income, yes, dividend also, it is not a part of your um, total outward supply. No, this is away from GST, because shares and securities are not goods as far as the GST law is concerned. Therefore, it is outside GST. So dividends and shares are not subject to GST anyway. Therefore, even while configuring the dividend income, make sure the the GST is not applicable to the dividend income. Then the foremost thing here is the transaction value of assets deletions during the financial year. Okay. Transaction value on the assets. Okay. Let me again, once again, give you an example of how on sale of assets is treated in Tally. I have a motor vehicle here. So for the motor vehicles, I have a motor vehicle here. I am selling the motor vehicle now. Say for example, on 10th of May, I am selling the motor vehicle. Okay. So my 10th of May, I am selling the motor vehicle. So interest is a supply in GST, you have to show in GST. Yes, sir. Yes, sir. Well taken, sir. Exempted supply, we can show it up. So, sir, suggestion, if it is interest, you, if you are very much clear on interest on term deposit. So I can say interest on term deposit. So make it GST applicable and put a right HSN code here. And I think the 9967 or something, it's coming. Just check with the exact HSN code and make sure it is exempted. Taxability type, whether it is exempted, nil rated or non-GST. Even this non-GST, I am telling, non-GST anyway, we are going to see in the next 2-3 points. So for a petrol bunk where we have the petrols and diesels sales, all these petrols and diesels are outside GST. So I can classify it under non-GST. Like this, while configuring the ledger itself, I can configure any bank interest and exempted. Yes, certainly, sir. Other interest are taxable. Yes, whatever interest we are collecting for the delayed payment, it is taxable. Only the bank interest is exempted. Well taken, sir. Thank you. Then coming back to the assets deletion. Now, coming to the assets deletion part, so I am putting a sale entry. I am putting a sale entry here. So assets deletion entry. Here, let's say I have a car, something, or I can say I can put it in a voucher mode also. No need to go to the inventory mode. So I can put it in a voucher mode itself also. Or you need to, you can put it in a accounting invoice mode also. So change mode, accounting invoice mode also you can put it actually. So here I am putting the sale entry here. So sale of motor vehicle is there. Sale of motor vehicle. As far as the provisions are concerned, sale of motor vehicle, I am classifying it as under sales because motor vehicle sales, obviously it suffers a GST, but how much of GST and all, it's again a different question. I leave it to you also. Then the code and all, I'm just putting some example code. Don't think of right code and all. So just for example, trial purpose, I'm putting it. Yes, the taxability, as far as the taxability is concerned, it is 18%, now 28%, all the small cars have been came down. So the type of supply, again, this topic we are going to cover in the later part of our discussion. This type of supply, it's a good, it's a capital goods, right? So capital goods we are selling, right? Now, I'm selling that motor vehicle at 12 lakh rupees. Again, here is a small thing that needs to be noted where the used vehicle sale has some specific treatment in GST, wherein though the value, sorry, the treatment is like this. It depends on the value over and above the book value. So they are saying margin of supply, how much the margin you enjoy out of the sale. So therefore, though my sale value is 12 lakh, but I may end up in putting my GST at a different value. So here in the I am enabling the transaction. I am enabling the uh, putting of GST value on the transaction. Sir, I will just answer the question later, sir. Okay. So I am enabling the GST at the transaction value. Now, when I enable it, enabling is over this F12 configuration from the sale invoice, where modify GST, HSN, SAC details, I am putting it as yes. Then after putting the amount, when this separate menu is coming, under this sub menu, I am having a separate configuration F12. Here I can say I am going to say my transaction value here. I am going to override my transaction value because my original sale value is 12 lakhs. My GST is on the difference of the value compared to the book value. So my book value margin would be 2 lakhs. So I can say 2 lakh here. So see the difference here. So I said 2 lakh is the transaction value. Then I calculate GST here. So though the value is 12 lakhs, but my GST is calculated on the margin of supply 2 lakh, 18 percentage on the 2 lakh. So 18 percentage on the 2 lakh rupees. So this is how my treatment as far as the motor vehicle is concerned. So coming to our GSTR1 and as well as yes, override. I overridden the information here on reconciling the then the another treatment would be, so here I made a sale invoice. This 12,36,000 obviously is my deletion. So obviously is my deletion, right? So I have not taken input of any input tax credit from the motor vehicle. Therefore, I can journalize this sales. I can this journalize this sale. So I can, what I can say is vehicle, spelling is wrong, vehicle. So I can say this 12 lakh rupees, I can transfer this 12 lakh rupees to my motor vehicle so that my motor vehicle value will get reduced. My fixed assets schedule will get this deletion thing. So the main concern over here is my when I say the annual return, so yes, in May month, though I sold out the vehicle for though I sold out a vehicle for 1 lakh and 36,000, the total invoice value, my transaction value considered here is 2 lakhs. So my total taxable supplies is also with this 2 lakh only. Totally it comes 21 lakh 80,000. Here again the same difference comes when I compare this with my P&L account. When I compare with this my P&L account. Okay, let me take some questions over here. Whether GST is applicable on passenger transport service and non-AC buses by air I registered. Sir, this is purely a technical question. Anyway, with my knowledge, non-AC buses right now doesn't attract any GST, sir. Only the AC buses attract GST. That too, that 12% is now been revised to 18 percentage. Please check it out with effect from 21st September. Um, then GST applicable, then can we take input of buses? Sorry, it is again the technical question, sir. Yes, sir, input of buses, normally who is going to take? Again, there is a question. While we go through the section 17.5 ineligibility, see, there it is specifically saying passenger transport services who are all engaging in transportation, they are eligible to take input credit. So other than that, if you are a corporate company, you buy a bus for your employees transportation, that in that cases also it is over and above 13-seater capacity. So therefore it is eligible. So all this depends on the section 17.5, sir. Please read through the section 17.5. If not applicable and anyone taken credit and reverse. No, sir. No, sir. Buses, it is eligible, sir. In my line, which I said right now, this GST applicant, everyone not paid GST but taken input but can pay GST in annual return. Certainly, sir. Annual, if you are ready to, if you are willing to pay the GST in the annual return, you can pay through DRC3 challan with the interest, up-to-date interest until the date of payment. You need to calculate interest at 18% per annum, and you have to discharge liability with interest. Then Sir Ashok Dalmia's question, if interest on delayed payment is charged to debtors and invoice is carrying various rates of commodity as various time in various invoices, now what is the tax proportion be worked out as the customer is charged as lump sum and not various tax rates in the interest collected? What are the rules governing taxes? Sir, it is purely, again, I am saying, sir, it is purely on the taxation aspect, provision aspect. My simple answer to this question is, as far as my reading over the law the interest on delayed payment is chargeable to tax similar to the taxes which you have charged on the related tax invoices earlier, sir. So beyond that, have some deeper study on the law. This is what my observation in the law. So interest on delayed payment suffers tax similar to what it was in the original tax invoices, the original goods which has suffered. Then in GST not paid on gain on sale of vehicle last year can be paid. Certainly, sir. Certainly you can pay, as I said, pay with along with interest, sir. So all the questions have been answered. I believe I'll continue. Oh, sorry. Again, how to work out with the same in tally? How to work out with the same? Yes, sir. Certainly, sir. Certainly. I agree, sir. As far as the interest, right? Sir, create the interest as a separate supply, sir, under sales account, and put the HSN, same HSN of the product HSN, and you can have a separate accounting invoice for that, sir. Accounting invoice for that, sir. Okay. Like that, you can go about. So, interests. Yes, sir. I am just proceeding with the presentation right now. Thank you. Thanks for your valuable questions here so that everyone here will be benefited out of it. I hope the questions have been answered. I'll continue here, over here. Thanks. Okay. Transaction value of assets deletion being taken care here. As far as the motor vehicle, it depends on the margin of supply, how the tax is calculated on the margin of supply, how tally takes care of that margin. Also, I have explained to you. Thank you. Okay. Hope you understood. Right. Then, as far as the discounts and all, there is a peculiar category getting incentives and discounts on commercial credit notes. So for this discount incentive ledger, you have to set GST applicability as not applicable, because there is a separate circular running on this commercial credit notes where it doesn't require any GST implication over it. So then we will have this tax, no tax on the sales, as well as we do not have any reversals of ITC on the part of the recipient on this commercial credit notes. Then make sure any advances of supply of services have been received which are yet to be invoiced, then that has to be taken care. Anyway, I'll just quickly give you a small um, suggestion how it is there in tally, applicability of advances, treatment of advances, right? We have a configuration F11 feature. We have an F11 feature in this set alter company GST rate and other details. Put it as yes. Get into that. There is a separate feature, show GST advances for adjustment in transaction is there. Make it as yes. And then again, We have GST advances also there. So we have to enable that GST advances, and we have to calculate the taxes on the advances received on supply of services, because only the advances on goods are away from the taxability, but advances on the services we need to pay the GST. Therefore, this again has some differences over comparing the outward supplies with the books sales account. Then non-GST, as I said, to a petrol bunk or petrol bunk supplies, where petrols and diesels are the supplies. So while creating the ledger, sales ledger itself, I have already told you how to say taxability type while creating the ledger itself. So while creating the sales ledger, so if I say petrol sales, all this comes under sales account. Anyway, GST applicability is there, but the applicability is there, but taxability type is non-GST. Non-GST. So if I can classify this as non-GST, this will automatically picked up to the monthly returns as well as the annual returns as a non-GST supply. This is how my key elements while comparing the turnover in a year. So just to recap what we have understood here, I'll just highlight the main things. First point, compare the sales ledger with the GST returns, GSTR1, 3B and annual return, GSTR1 outward supplies. Make sure the values are the same. If any changes, might be it occurs on the values which I have listed here. So for the discounts, other charges and all, told you, so I told you to take a sales register in a column format and have this reconciliation of total. What is the total in sales ledger? Probably the sales total in the sales ledger would be higher. The outward supply value in the case of discounts, the sales value would be higher in the sales ledger, and the outward supply would be lesser in the GST returns. So identified those differences, and by having the columnar format of sales register. Okay, I'd like to know the correct procedure for recording the car and home purchase entries on a installment basis along with the GST details in the books. Sir, as far as GST is concerned, we take an input credit on the basis of invoices, right? So once an invoice is raised, we used to take an input credit, put a journal entry, debit the respective asset account, debit whatever tax, debit CGST, SGST, whatever, and credit the higher purchasing company or whatever the supplier. So again, over the period of repayments, you will have some interest on that repayments. So put a provisional entry on interest, separate journal, put a journal of debiting the interest on those repayments, credit the same the lending company, higher purchasing company or lending company, so that the EMI repayments over to that ledger would get reduced. So I think you are able to get it. So my first entry would be journal entry of debiting the asset, debiting the tax, and crediting the respective lender account or the higher purchasing company. Then put again one journal entry for interest provision for the period. Uh, then debit the interest account, credit the respective lender account. Then by that, the lender account would be having the total value of EMI, the principal plus interest. So while you make a payment to that lender, put a simple payment entry, debit the lender or higher purchasing company, credit cash or bank, whatever you make. So this is how you can make in a journal entry in Tally. Then Circular 251 again, sir. I am letting it to your discussion. It's purely on the legal side. We are just we will just concentrate on the tally prime here. Recap for deletion of asset value customization. Yes, sir. I'll come once again here. I'll come once again here. Yes, sir. Here, asset, sale of asset, sale of motor vehicle. I am putting a sale of motor vehicle entry in an accounting voucher mode. In the accounting voucher mode, while putting the sale entry, I am saying the um, GST values, transaction value. I am saying modification of GST transaction value at the voucher entry level. So therefore, I put a yes to this particular configuration. Once I put a configuration here, after the amount, this separate menu comes. Under this also, I need to have all the options. Probably by default, this override taxable value will not come. So I have to go to the F12 configuration again. I have to put override taxable value here. Then override taxable here, I can put the exact taxable value. Though the vehicle is sold out in a higher price, my loss is the margin of supply is only the transaction value. Therefore, I put a margin of supply here as a transaction value. Then my tax is auto calculated on the revised transaction value. Now, sale invoice to the vehicle is generated. Then my value should not show up in my sale account, profit and loss account, because it is an asset. It has to go to the fixed asset schedule computation. Therefore, I am transferring that entire bill value, entire not a bill value, the transaction value, sales ledger value to the motor vehicle account to compute my fixed asset schedule. So this is how my sale of motor vehicle being taken care in the tally entry, in the tally books of accounts entry. Okay, thank you, sir. Thank you. Thank you, sir. Thank you. How to download a GST return form website to GST details form. Detail, sir, I just know what are all the details you want to know, sir? Actually, the details actually there are so many details in the connected tally we can see. For example, uh, to just identify my vendor or my supplier, sorry, vendor, supplier or my customers GST. So I can fetch GST details straight away from Tally like this here. This is a Tally connected feature. It is available only in the Tally Prime's latest version. I can reconfirm. So here the GST number is for the Tally Solution Private Limited, but I have said it is for RJ traders, so I have to correct it, right? So let me come to another trader. Here, fetch the details. So it is Hotel Star Plaza is there. I have said it is Ram Traders. Like this, I can check it out in the GST registration numbers from the ledger creation. This is one way is possible. Then another way is in the GST reports menu, utilities menu is there. From there also, I can check the GST numbers of the suppliers. So GST numbers of the suppliers. So from this, I can fetch collectively, I can fetch details also. So like this, I can check it out whether all these things have been active or not. Like this, and there are so many ways of checking the connected facilities of GST, connected GST facilities details. Even then, the one more thing I just want to say, the connected GST details. I just understood your question like this. So you want to understand the GST details, right? So I can fetch the information like this. Even with that information, filing history is there. I can again go furthermore and have some information about the client and from the GST portal of the respective client and what are whether the e-invoice is applicable to particular client, how effectively he has filed all the returns, everything I can browse through. These are all the things already there in the Tally connected features. Anyway, I'll just get into other subjects. Sorry. Just a minute. I'll get into many more great things are going to come, sir. Please wait and we'll take the questions in the later stage. Managing ITC reversal entries and different sections, because right now GST annual return gives us the obligation to fill up the ITC reversal tables of table 7 at GSTR 9, and we want to say what are all the where and what are all the section under various sections your reversals have been taken care. So I'm just getting into the annual computation straight away. Here you are seeing the tally's annual computation here. Our tally is already enabled with this thing. This is the table 7 information. You see here, this table until 23-24 of financial year, it was optional. But after this 24-25, this table needs some bifurcation like this. So rule 37 bifurcation, rule 39 bifurcation, rule 42 bifurcation, rule 43, ineligible ITC, all this bifurcation is required right now. Okay. So here, I'll go to the, yes, computation is here. The computation, in my computation, we have, I think we don't have April 24 to March 25. Okay, here in this reversal, you see, in this reversal, right now in 24-25, we need the bifurcation to be made in table 7. So tally computation gives the bifurcation straight away. How to get this bifurcations? What are all the elements under this bifurcation? These elements are like ineligible ITC, ITC reversal under various rules and all. Okay, this is what we are going to see right now. So ineligible ITC, I'm just getting into the entry here. We have a peculiar facility, most advantageous facility as Tally at Tally. In the journal entry, F7 journal entry, stat adjustment is there. Stat adjustment is there. All these ITC reversal have been very effectively, very professionally handled here. In the stat adjustment of the F7 journal facility, in the F7 journal, when I press a stat adjustment, um, just a minute. Sorry for the disturbance. Yes. So in this stat adjustment, we have GST type of duty and the nature of adjustment as there are so many adjustments here. I can use this stat adjustment in different categories here. Decrease in the tax liability, increase in the input tax credit, increase in tax liability. Each and everything has different options here. So decreasing the tax liability itself has this many options. So for this tax adjustment alone, we can have a separate session on this. But my objective here is reversal of, just to cover the reversal of input tax credit, how it is taken care. See here, the bifurcation which are required by the law is available here. So 43, rule 42 reversal, ineligible ITC, all these reversals are there. So only thing is I have to choose this and put a journal entry. So in the case of reversal, the effectiveness of that particular entry would be all the input credit which have been already availed has to be reversed and to be added back to the respective purchases or expenses or the assets value which have already been purchased. So here the tax on my motor car is an ineligible ITC, so that I am reversing it. So simply putting this journal entry won't serve my purpose to take it to the respective reports. For this, Tally is giving me an option in the start adjustment level. I am selecting this additional nature of adjustment. By selecting this additional nature of adjustment and putting this entry, this makes me to report the ITC reversal categories in the respective columns, respective tables. In this here, this is much more important. This is much more important actually. So for this ITC reversal, here we have all these reversals categories. Along with this ineligible ITC, we have all these category. So in my F7 journal, I'm selecting the start adjustment. I'm selecting the duty type tax, type of duty and tax as GST. And again, I'm selecting the nature of adjustment as reversal of input tax credit. In the additional nature of adjustment, I need to select one of the populated category here. Then I have to put an entry like this. My debit would be on the purchases. If it is any my regular purchase of materials, I need to debit my purchases. If it is my any expenses, for example, there are some expenses, traveling related expenses, some personal expenses which have been debited in the P&L along with the ITC part. If it is disallowed in GST, whether it is in a 42 rule 42 or in any other manner ineligible ITC, I need to debit that expenses and credit the respective tax ledger. If it is on intrastate supplies, I need to credit the input CGST and SGST, or if it is an interstate supplies, I need to credit the IGST, input IGST. This is the accounting entry. I need to select the respective rule, relevant category of adjustment. Then Tally will, and the accounting entry is here. The main basic entry for all the type of reversals would be I need to reverse the input credit, because once I initially avail that input credit, I put the entry like debiting the respective expenses, debit the tax ledger, credit the supplier and all. So once I debited, since I debited the tax ledger at the time of reversal, I need to credit the tax ledger. I need to debit the respective expenses and purchases account. So this is how my ITC reversals have been taken care. By putting this entry under this category will take you to the respective disclosure requirement of the monthly return as well as the annual return. Though we don't have any specific disclosure at the monthly return, because at the GSTR 3B, it shows in a single line. So you can see that, my annual computation alone has so many bifurcation, but my GSTR 3B has a single line information as per rule 32, 38, 42, 43. This is what my headache is. In my monthly return, I would have posted in the single line information, but in my annual computation, I need to bifurcate, I need to show it under the respective head. This is what needed in my current 2425 table 7 ITC reversal disclosure. So I hope everyone here is able to understand what I am trying to say. Can you please acknowledge, once you understand this, please acknowledge the entry of ITC reversal, the importance of ITC reversal breakup in this particular financial year. So make an entry in this way so that you will get the respective classification and then in the respective reports. Let me quickly go through the questions here. Can you explain how to download the GST data? Yes, sir. Yes, sir. Sir, it's not at all an issue, sir. Sir, we have an exchange. We need to have a TallyPrime latest one about TallyPrime 5.0. Here we have exchange menu. In this exchange menu, all GST option is there. Download GST return, sir. This is what the download option, sir. I think your question is there. GSTR 1 and 3B detail from, sir, 3B we can't download. So yes, GSTR 1 is the invoice wise. GSTR 3B, I don't think won't be much of an information because it is a summary consolidated information. You see here, download. These are the returns I can download, sir. Yes, 3B also here. Anyway, 3B also can be downloaded. The values, facts, the values can be compared here. GSTR 1, 2A and 2B, 3B can be downloaded. Anyway, my practical requirement would be 2B, IMS and GSTR 1 needs to be downloaded and compared. Then like this, we have to download all these things. How can I entry ineligible ITC I have shown here, sir. Then could you please explain how to connect GSTR portal tally once again? Okay. Yes, sir. Sir, for this, we need to configure the user names. F11 feature, enable goods and services tax. Yes, there. Here, the connected GST details is portal username here, and say your method of filing the GST return, whether it is an EVC or DSC like that, put it like this. And this is the first configuration. Put the username here, Then after putting the username, you can go to the all GST option, GST login, go to the GST login, and you will have a username. Since I have not put the username, it asks for the username. It asks for the username. Then after the username, it will ask for you, prompt you to get the OTP. So once I say send OTP, it sends an OTP to your authorized mobile number and email ID. By putting that OTP, connection would be established between Tally and the GST portal. This is how it has been connected. Then after connection, go to this GST option, download, upload, all those things will happen, sir. This is how the Tally connected features works, sir. Then as far as the questions are concerned, just a minute. Excess ITC due to range of 12 to 5%, what stat adjustment, sir? Excess ITC reversal, sir. It is ITC reversal. It is in the case of say for example, it could not be in the 12% to 5%. 12% and 5%, I think this will come under inverted tax structure. All these things will happen only when your tax structure has been revised to exempted. In that case, only all the taxes lying in the credit ledger has to be reversed further. So for that, we have Rule 42 reversal. Select that Rule 42 adjustment over there and put the same entry, debit the respective purchases ledger and credit the tax ledger, input tax ledger. On ineligible GST, we don't enter the GST value, only we take the gross value in the expenses. Is it correct? Ineligible GST, no, sir. In the ineligible GST, gross value is popped up and given. While we make an entry over here, yes, obviously ineligible entry. Your point is correct. Only in the other reversals, we used to give the say for example the reverse charge mechanism and all, we give the transaction value. In the reversals, we just reverse the tax value alone, sir. Correct. Your point is correct. Then thank you, sir. Then can I make ledger for purchase ineligible for ITC? Certainly, sir. And pass journal entry for GST reversal. Yes, sir. You are absolutely right, sir. Sir, I would like to know the correct procedure for recording the car and home. Yes, I have already told you this thing, sir. Thank you. Yes, we will proceed further. Thanks for asking things. Then, as far as the RCM liability is concerned, reverse charge liability, there are two steps. One is creating the liability, first thing, because it is self-created liability. And we are taking the input credit again. So there are two sides of RCM is there. So for creating liability, same F7 journal, adjustment, nature of adjustment, their liability is getting created. So increase in tax liability option is selected, and the sub option, additional details, we selected as purchase under reverse charge. Then tax on RCM separate ledger we can create under current assets, and credit the output tax if it is intrastate CGST, SGST, if it is interstate IGST. Like this, we have to make the first entry. The second entry on creating the, on claiming the input tax credit, I need to debit the input CGST, input SGST ledger or input IGST. My simple request here is, always whenever you are maintaining the full set of accounts in TallyPrime, have different ledgers for output CGST, output GST and input GST, because the tax ledger balance, arriving the balance is much more important at the year end. We need to compare it with the credit ledger and all. No, if we maintain a simple single CGST ledger for both input and output, there would be confusions of debits and credit entries, as well as the GST payment entries. There would be, so the same debit will come in the debit column. So to avoid all those things, my simple suggestion in maintaining books under TallyPrime, try to have a separate ledger sets for input GST, separate ledger for output GST, also have GST payable separate ledger. Every month, balance the output liability and input liability and transfer it, the net liability, if any, to be paid to the GST payable ledger. And like this, you maintain it, you will have end up with the correct credit ledger balance, tax ledger balance in the year end. Similarly, put all these tax ledger adjustments, tax ledger adjustments, journal stat adjustment entries. In the case of ineligible ITC reversals, all those things, then only you will get the proper ledgers at the year end. Then coming to the type of supply. Type of supply, this also needs some important significance. And in the recent past, where the law earlier it was not compulsory on giving a bifurcation, but in the last 2-3 years it has the importance of bifurcating at least between input and capital goods. So law requires the ITCs to be bifurcated in the table 6 of GSTR 9, this input and input the capital goods. So configuration is at the stock item and accounting ledger. So I'll directly go and show it to you. So this type of supply can be configured at the stock item and at the ledger level. It depends on where your source of information resides. I also want you to note down this. In the latest tally, we have here the set alter GST rate and other details. And there are some additional configuration here. Just set source GST rate and set source of HSN code. All these two questions put to yes over here. And you see here, there are additional configuration, two different additional configuration is here. The latest TallyPrime just identify how your GST rates are picked out, whether it is picked out from the ledgers or from the stock item. Just make it sure to correctly generate a GST report, as well as to reduce the exceptions arising in the GST computation tables. So rightly identify your source of information, where from your GST rates are picked out, where from your HS and SCSC are picked out. You need to just mention and configure here. Then only you can go without any hassles over preparing the GST information. Then type of supply. Come to type of supply here. The stock item, when I say the source of information is stock item, then all my HS and SAC is configured here. Along with that, type of supply is also there. This type of supply, if you are not finding it here, go to F12 again. I am saying show more configuration, show all configuration. In show all configuration, type of supply is there. Show type of supply If it is set to yes, then only that type of supply will come here. Then as far as the ledger creation is concerned, ledger creations for this sales and all, here is also the same type of supply configuration is there. So type of supply configuration is there. So when I say the any sales ledger, um, and type of supply comes here. Type of supply is nothing but the bifurcation of input tax credit over this input services and capital goods. For accounting purpose, I am just classifying it as whether it is a goods purchase or a services procured or the capital goods purchase. I am just configuring it in the ledger level as well as the stock item level. That makes you to prefer that makes you to prepare the computation tables with the bifurcation of this inputs and capital goods, which is required in the recent past law on computation of GST. In case of GST on good on insurance, I make entry for a tax ITC, but Tally auto make reversal also. Report shows input and reversal automatically. Ledger HSN type of supply is services. Yes, sir. Certainly, sir. I do agree with that, because here ineligible. When I say here, when I say sir says your tally is auto reversed this thing. So we are having a configuration here. Eligible, ineligible configuration is here. Eligible, ineligible configuration is here. Say for example, if it is not sales, if it is purchases, then that question will come. So here is the question. If I say eligible input tax credit no, that will auto reverse. That will auto reverse. Sir, you are able to get the point, I believe. You are good on insurance. You said if you create this ledger and say eligible input tax credit no, then this will auto reverse your uh, input credit, sir. This is what the configuration Tally is by default it is having in the latest versions of TallyPrime. Yes, coming back to the type of supply, as I said, it is configured in the stock item as well as in the ledgers. So if you do not find that option, go to the F12 configuration, find it and set it as yes. Then that question will come in your ledger creation screen or stock item screen. You can pick out whether it is a goods or services or capital goods. Enabling type of supply reporting at transaction level is also possible. This and all is required. Say for example, my printing and stationery. I may purchase a product in the nature of a goods, in the nature of services. So if you have that much of flexibility, so then activate this transaction level feature, and in the transaction level also we have type of supply to be configured. Here the type of supply comes in this transaction level also I can pick whether it is a goods, service or the capital goods. So like this type of supply is picked out at various levels actually. One more important thing, as far as table 6 is concerned, in the GSTR 3B, we have this previous year by for split. Previous year split is there actually. You see, this is the screenshot of the latest table 6 of our GSTR 9. Latest um, table 6. In this table 6, on the bottom part, it bifurcated in two things. One is 6A is bifurcated into three items, 6A, 6A1, A2. In A1, they are saying ITC of any previous financial year availed in financial year other than the reclaim. So this information is also available in our Tally computation, annual computation. We have this input tax credit availed for previous financial year. Value is available here. Value is available here. So how this could be availed, I'll show you here. So here in this annual computation, for the 24-25 financial year, for the 24-25 financial year, I have the input tax credit. I have the input tax credit. In this input tax credit availed for previous financial year, the item that has to be carried to our table 6A1. So this is an one and only feature in Tally alone. One only this is suitable for our current requirement of table 6. How I get it? So while checking our input tax credit, we have the set effective date. No, set effective date. This is, though it is a previous financial year entry, I have just set it the effective date of this particular entry as the effective date of this finance effective return date as 1/5. Though it is a entry of the previous financial year, I in the tally I have set the effective return date as the subsequent year. Therefore, my ITC is been carried out to the next financial year. That carryover is rightly reported under this head. This I can take it to straightly put copy paste in my table 6. Whether this information sounds good, can you anyone please quickly give a feedback? Yes, sir. This is one of the finest thing. This is one of the finest element right now available. Please avail it. Please avail it. Please do it. Use the effective date of return and have the proper bifurcation of your input tax credit at the table 6 disclosure of GSTR 9. Okay. So then import of goods, again, there are a lot of treatments over import of goods actually, when you create a purchase ledger, there is a separate classification of nature of purchase as imports. Then straight away that IGST carries to import of goods. If you do not do like that, if say for example you debit your C&F agent, then for your bill value and all, in that case, I need to put again a separate entry for IGST value, because C&F agent only takes the money from you while they import any materials on behalf of you. They charge you some service charges. They charge you for any other expenses along with the IGST payment, even the customs duty and all. They raise a separate invoice. In that case, if that be the treatment in your books of accounts, I need a separate entry. I need a separate entry here by using the stat adjustment entry. Import of goods, this separate entry is needed. Then as far as the import of services is concerned, as I already told you, it's a peculiar requirement wherein the liability is created similar to our reverse charge mechanism. The liability is created by us separately. For this, I have some temporary ledger tax on imports like that. So I create this liability first on import of services under this category: start adjustment, type of duty, GST, nature of adjustment, increase of tax liability. Creating the liability, I create under import of services, create this entry. Then taking back the input credit, I put the entry like this. This is somehow similar to reverse charge mechanism. Two ways of doing it, two type of work has to be done. One is creating liability and the taking back the input tax credit. So there the option is purchase under reverse charge. Here the option is import of services. Import of services under increase of liability, as well as in the ITC import of services, I am selecting. The entries are here. So taking the creating the liability, this is the entry. Output IGST is credited. Then taking back the input credit, my IGST input is debited. IGST input is debited. So all are journal entries only, accounting journal entries. May be sure about the journal entries. Only thing is, in the journal, selecting the proper category classification makes you to populate the information in the right table of the GSTR 9 or monthly return and whatever in the GST. Then the last topic of our today's discussion, the HSN summary. HSN summary. I just want a few of your valuable time on this HSN summary. Just make sure, are you rightly configured under this F11 feature? set alter company GST rate and other details. Again, in this additional information, you have this create HSN summary for which section. It is important because as far as the prevailing GST law is concerned, anything below 5 crores of anything below 5 crores of aggregate annual turnover, we have an obligation under law only to report B2B transactions when my digits are disclosure on outward supply. Here, and my digits of disclosure are only 4. My digits are disclosure are only 4. If my turnover is over and above 6 digits, my disclosure is on both B2B and B2C, and my disclosure would be 6 or 8. If you are involved in exports, my digits of disclosure are 8. If you are in a local supply or interstate supply, my disclosure is enough at 6 digit, like that. So make sure this digit classification is rightly made. Then if I do this classification rightly, my annual computation automatically gives you the summary of outward supply here. Summary of outward supply here. Here, month-wise is there. When I go month-wise and put your period, whole period here, then it comes with the whole year compiled HSN summary here. So this is um, this is the compilation part. This is the computation part as far as the HSN disclosure on outward supply. HSN disclosure of inward supply, till now it is not mandated as far as the recent guidances of the annual return disclosure. So till we can wait for outward supply, but Tally is already having that HSN summary inward supply. If you need it, you can take it, but right now the law doesn't mandate you to take the inward supply. Only the outward supply HSN summary is required. So we'll just get into the questions. Is there anything? Um, Updated table, sir. What you are meaning? I am not able to get it. Updated table, sir. In the updated table, just verify that 13 bar 2029 RCM and URD how to segregate, sir. Sir, we have a separate in the stat adjustment. Tally is clearly bifurcating when you are reversing that reversal of input tax credit. We have purchase under unregistered person. Even when we are taking input credit, we have purchase under reverse charge under unregistered person and registered person classification is there. Tally is having this both classification here. Even in the tax liability creation also, purchase under unregistered person and registered person separate classification is there. So be sure, be cautious on selecting the respective segregation so that Tally will takes care of you to registered and unregistered person on RCM category. How to set up a previous year financial data. Sir, previous year financial data, sir, as I said, in your the data of your last year, where in your input tax credit, if you find any particular entry of ITC, you want it to be carried forward to next year, just set effective date as the following month date. Then automatically, without changing the voucher date, Tally takes you to the data to the previous year data, sir. So this is what my question. Thanks for your participation. The entire participation. The HSN summary is also coming to an end. So as I said you, here HSN summary based on the configurations features at the F11, and HSN summary is required at GSTR1 and GSTR9. Finally, annual computation and TallyPrime gives you the consolidated HSN summary for the entire year, right? So thanks for your being here with us. So thanks once again. I think I have given some useful, at least some useful information by disturbing your last 90 minutes of time. I have just given you some, at least some sort of useful information, I believe. So thanks for your participation. So thank you, thank you, thank you.
Thank you, sir. So perfectly timed. If you see, we started at 3 and we are ending at 4:30. We finished with the tally demo, with the deck, with the Q&A. It was so perfectly planned. And as you can see, the audience have asked for the recording and they're saying it's a very informative and valuable insights. So thank you so much to the audience for being here. And as I say, LL sir is an expert in indirect tax and our tally evangelist. So he's our go-to person. So we definitely know he always have valuable insights to share. Thank you so much. I will make sure that the recording is edited and is uploaded in our social media channel. I've shared the playlist in the chat as well. So please do see. And also, if you're a chartered accountant and still not part of our WhatsApp community, I've shared the link in the chat. Please do join so that you can attend more such webinars and get details with TallyPrime and whatever latest is happening in Tally. So thank you so much, LL sir. I will now end the session with your permission. Thank you.
Thank you. Thanks for all. Thanks for all.
Thank you.